To be honest with you, I'm much more interested in starting businesses than in investing in the stock market. Well, I'm still interested in the stock market, but like business is like 10 out of 10. Stock market is like 7 out of 10. Okay, but it's still a very interesting topic, right? So which one of you have invested in stocks? Like, yeah, some of you, right? So that's great. Okay, so I'll share with you my experience. So I actually started investing in 2014, right? So right now, by definition, I'm a professional investor because of the net asset that I have. And I have a YouTube channel talking about stocks with 50,000 subscribers. It's Cantonese. And I also write about stocks on the magazine, iMoney, right? Okay. So what is the game of investments all about, right? So to be honest, this is a very complicated concept, right? How do you beat the market, right? It's really complicated. It's not easy. Right, so what is this game all about, right? So do anyone know who is this guy? No? Okay, you guys should search him up. Okay, so if you're interested in investment, you should go on YouTube tonight and search him up. Okay, so he's Ray Dalio, the most successful hedge fund person in the history of the world. Okay, so he have this saying which is very, very, very wise. Okay, so he says that, okay, to invest and to outperform the market, you have to bet against the consensus and be correct. Okay, so what does that actually mean? Okay, so if you think about it, what actually affects the stock price? Okay, so what affects the stock price is people's perceptions of it, right? The market's perception. So if the market perceives this company as a great company with great prospects, then it is going to be reflected in the price, right? That's obvious, right? So in other words, the market consensus is already reflected in the price. So crappy companies are going to be cheap. Great companies will be expensive, as perceived by the market. Okay. So let's say so right now, for example, Apple is one share of Apple is like 150, right? So basically what that means is that at this moment in time, the market consensus is that Apple is worth this amount, okay? That certain market share. So if you buy Apple, you're actually betting against the consensus because you're saying, okay, so I think this price is undervalued, okay? Because the price of Apple right now is what the market thinks is reasonable. So the fact that you're buying it, you're expecting it to go up. So you're betting against the consensus. So that's why it's so difficult, right? Let's go to the next page. Okay. So what does it mean to bet against the consensus? It means that you never make money by thinking the same thing as everybody else, okay? Because if you have the same opinion as the majority or as the consensus, then you're not going to have any alpha, right? Because it's already reflected in the price, okay? So to bet against the consensus and be correct means that, okay, you see a mispricing in the market, okay? So you think, okay, this stock is currently undervalued. And you're right. So later on, the market realizes this, and it will be reflected in the price, okay? So in other words, you have to be forward-thinking. So you have to be a step ahead of the consensus and be correct, okay? So that actually involves like a better analytical ability because one way to beat the market is you get private information, but that's illegal, right? So the only way to do it legally is you analyze public information in a better way, right? Okay. Okay, so I'm going to share with you some examples later of what I mean by betting against the consensus. But I mean, if you want to buy companies, with a great business model, right? So companies with a great business model and a good management will normally perform better over the long run because the profits will more likely go up, right? So just an example. So 3 companies, right? Netflix, Facebook, and Google. So who thinks that? Why don't some of you share? So what do you think which business do you think has the best business model and the best management? So anyone? Okay, yeah. What's your opinion? Google. Yeah. Okay. Yeah. So you're correct. In fact, I agree with you. Okay. So let's go to the next slide. So I don't know how much you guys know about Netflix, but okay, to keep things simple. So the problem with Netflix is basically that they have to invest a lot to provide content. So regardless whether it's self-made or if it's copyrighted, right? So they have to actually pay an immense amount every single year in order to provide their service, okay? So that's why if you look at their free cash flow, even in 2021 with 200 million users, they're still generating a negative cash flow, okay? So that's actually not a desirable business model, okay? So that's one issue, and the reason why Netflix fell by more than 70% is because of this, and also because the number of users actually started falling, right? So that's much worse than expected, right? So next slide. Okay, yeah. So so I've actually predicted this in February 2020. Okay, so let's go to the next slide. Okay, so how about Facebook? So Facebook, they actually have a good business model, but the problem with them is, next slide. Yeah, so I think if you pay attention to what they're doing, you'll realize that their management isn't great, okay? So if they have better management, they can do so much more, okay? So if you look at, let's say, the earnings call for the past 5 years, if you really read in detail what their management is saying, they always make these empty promises, okay? So for example, a few years ago, they would say, oh, we will make a new payment gateway, okay, through WhatsApp, okay? And then e-commerce or digital currency. So these are all things that they've talked about, but none of them have really materialized, okay? So next page. Okay, actually one more interesting thing with Facebook is, do any one of you still use Facebook or no, right? Nobody uses Facebook here, right? So the issue with Facebook is that they will make you pay in order to get reach, okay? Because they want to maximize their profits, okay? But this strategy will only work in the short term, right? Because if you only get reach by paying, then who pays will get more reach, and then eventually you get garbage content, okay? So the users aren't going to come back, okay? So you essentially, you have the eggs, but you kill the chicken, okay? So that's a big issue, I think, with Facebook, okay? So for Google, I'm sure you guys know their business line, right? Like Google Search, Android, YouTube, Google Cloud, right? So these are all very businesses with a huge moat, and it just shows that they have a much more competent management compared to Facebook, right? Yeah. Next page. Hi. Next. Yeah, next. Okay, so just share with you some examples, okay, of trades that we have done, okay? So so there's this company called Futu, right? So I think some of you may use their app for buying stocks, okay? So we actually bought the stock in 2020, okay, October, and we actually made a YouTube video about this, okay? So the reason why we bought it is, so why were we faster than everyone else, okay? Because as I said, if you buy a company that is great, but everyone knows about it, you're not going to profit, okay? Because it's already reflected in the price. So you have to find a great company before other people find out, okay? So the reason why we found out quite early is because we actually paid attention to our daily lives, okay? So we use this app and we see that a lot of our friends are starting to use it, and the user experience is great, okay? So we started looking into the financials. Okay, so we see that during that time, their number of users is growing more than 100% year on year, right? And revenue is growing like 300%. So obviously it's doing great, right? So we looked at the valuation, okay? So the indicator, so to keep things simple, when we look at the valuation, it is the same as another company in the same industry, Interactive Broker, right? So Interactive Broker is basically a similar company but based in the US. But Interactive Broker is actually a mature company, so their growth rate is like 10 to 15%, right? So it doesn't make sense, right? So how can a company growing at 300% be valued the same as a company growing at 10%, right? So it's quite clear to us that Futu is being undervalued, right? So that's why it actually increased more than 500%, okay, after we bought it. Okay. So another example is Meituan. So I'm not sure if you guys know about it. So it's this app that's like Deliveroo in mainland China. So you can actually do all sorts of things on it, like buy food, book massages, etc. Right? So again, we found out about this company because of our daily experiences. So my partner actually went to China for a trip, and then so she knows about this great app that everybody is using. Okay, it's a monopoly. And then this company listed in 2019, right? At that time, the Hong Kong market is not very does not look at this company with a very positive light, because they say, oh, this company is having a negative cash flow, et cetera, right? But we know that, okay, it's actually normal that they have a negative cash flow this time because they haven't got enough users yet, okay? But as they get more users and as they grow their bookings business, they will definitely be profitable, right? So, and then again, we looked at the valuation and we see that, okay, it's unreasonably low, okay? So that's how we know about this company, okay? So actually, this stock actually helped my partner achieve financial freedom, okay? Next. Okay, so a more recent example, okay, so there's, this is a commodity stock, 3668, okay? So I'm sure you guys know about the Russian war. So the consequence of the Russian war is that there is a natural gas and oil shortage because they stopped exporting oil and natural gas, right? So you all know about it now, right? So actually this trade is I didn't discover it. A friend, actually a colleague, discovered it. Okay, so he's an expert in commodities. Okay, so what he was able to come up with, this was like way back when the war just started. Okay, so the idea that he had was that, okay, so if Russia is going to stop exporting oil, then there's going to be a huge shortage in Europe. Okay, because 20% of Europe's energy comes from Russia. Okay, so there will be this huge shortage in Europe. So how can they fill this shortage? Okay, they have to find replacements, and the replacement will likely be coal. Okay. So another thing about coal is that it's actually the worst source of energy in terms of pollution. Okay, so governments actually do not encourage it at all, and investors don't like investing in it. Okay, because it's bad for the environment, right? But during this period of time, so he predicted that, okay, so if there's a shortage in Europe, the demand for coal is definitely going to rise, okay? And the supply of coal is highly price inelastic, meaning that even if the price goes up, there won't be more supply, okay? Because first of all, investors are not willing to invest in coal mines, okay? And governments are against it, all the regulations are against it. So you have a situation where, okay, the demand is rising, but the supply wouldn't rise. So you have a price squeeze, okay? So essentially the coal price tripled in the past 6 months, okay? So this is a stock that profited from this whole situation because it's the biggest coal miner in China, okay? Well, actually, to give you more details, so there are a few companies in this industry in the Hong Kong market, but the other two actually sell coal to the local market in China, okay? But this company, 3668, they have access to the European market. So they benefit the most from this whole situation, okay? So as you can see, if you know about this information now, you probably won't profit much from it. So you need to think a step ahead, right? So this is very important. Okay, great. So, great. So let's go to the Q&A. Okay. So if you have any questions about stocks, about startup, okay, you guys can ask. Okay. Let's see.